Cybersecurity behemoth CrowdStrike, CRWD stock, is down around 13% today. And this is part of a significant downdraft we've seen just this past month, down over 30%. This follows a global tech outage driven by a faulty CrowdStrike software update. This was via their Falcon product, I believe. And this impacted roughly 8.5 million Windows machines. Microsoft makes a quick comment that, hey, this is less than 1% of our total, base of machines, but still 8.5 machines seeing this blue screen of death. That's a big deal. It impacted a lot of businesses, from healthcare to travel. Earlier, just in the last 24 hours, you see Transportation Secretary Pete Buttigieg saying, like, look, Delta Airlines, like, you're the last of the airlines still struggling with this huge IT problem. You need to figure out how you're going to solve this, because we're getting, huge complaints. This is an unacceptable level of customer service. So you're seeing it really is impacting a lot of different businesses. And you have the CEO of CrowdStrike, George Kurtz, talking about this was earlier. This was his first announcement, had over 10 million views on Twitter, talking about, like, look, we're actively working with customers impacted by the defect found in a single content update for Windows host. Personally, I really don't like how he structured this. Instead of saying, like, whoopsie doopsie, like, we messed up. Instead, it's like, hey, we found this content update that was a problem. Clearly a lot of legalese versus taking ownership. And I'd rather have an owner. It's the Warren Buffett approach to problems versus this George Kurtz approach, which is, the Warren Buffett approach: get it right, get it out, get it fast, get it over. He's talked about that previously, like, when there's a problem, and it's taking this level of ownership. And I think that you're sort of skirting the issue based on his comment here, hoping to avoid mega lawsuits in the future because of this, saying, look, it's only the Windows machines that were impacted, not Mac or Linux. And he's saying, look, this isn't a security incident or cyber attack, but he's hoping it doesn't spiral into one, because, look, make sure if you have that relationship with CrowdStrike, you're using the recommended, communication channels, the official channels for the updates, because what they're finding is that, hey, of course, bad actors are looking at this and they're rubbing their hands together thinking, hey, now's a great time to pretend that we have a relationship with CrowdStrike and we have the fix, and, why not take one problem and turn it into two? And that's, so hopefully it doesn't spiral into a worst case, sort of situation where you have even more businesses impacted, or some businesses start actually downloading some, malware that results into much worse consequences. Now, I think it is important to take a step back looking at CrowdStrike, because this is a company that is tackling a huge market, $100 billion security market. And you can see, cloud security, observability, identity protection, threat intelligence, security, and IT operations. These are each multi-billion dollar markets, and layering in AI intelligence makes this a huge market now. Calendar year 2024, when you zoom out a few years, you're probably talking about $200-300 billion. You see their execution over the last few years. I'm using AI ticker chat here. You see they've grown at an incredible rate. This is a dominant leader in the cybersecurity space, growing from under $1 billion in revenue a few years ago to over $3 billion, and projected to be, this is based on Wall Street estimates in the light green here, projected to be around $4 billion this year. My personal take is, based on this outage, you're gonna see some pressure on that. I think it wouldn't surprise me if you start seeing some analysts start pull back on that a bit, just because it's like, well, wait a second, the ability to cross-sell, the ability to upsell, it's a lot harder when you are a global target like this for a huge snafu. And it's much harder. Now, thinking about their adjusted profit figures, they are still expecting, Wall Street hasn't updated the figures yet, but Wall Street was expecting their adjusted earnings figures to grow nicely in the years ahead. You see a huge jump, but this is due to a difference between GAAP earnings versus stock-based compensation, which is a huge add back here. And looking at, the current year, this was their guidance, most recent guidance, once again, around $4 billion in sales, real profitability. Now this I shouldn't say real profitability, non-GAAP profitability. I mean, their real profitability is much smaller because they're adding back so much stock-based compensation. And so the question is, okay, so where does CrowdStrike go from here? Is this a dead bird? Is this, is this a company that, can rebound from here? Is the stock, now in bargain territory? Let's consider these different dynamics. First of all, on full disclosure, this is not financial advice. Also, recently, Robin, a premium member of Unrivaled Investing, commented that, and this is a direct quote, "I am an extremely happy customer of Unrivaled. The information services you provide to me are invaluable." That's a direct quote. This follows another subscriber posting on how, and this is another direct quote, "I'm currently ahead of my investing goals to retire at age 45. That's thanks to Unrivaled Investing." So if you're looking for compelling investment ideas, come check out Unrivaled Investing, weekly updates, monthly videos, monthly exclusive videos, looking for compelling ideas. I'm sharing my own personal journey. So looking at CrowdStrike, the valuation framework. So this is using the comp analysis feature with AI ticker chat, just to do a quick check of like, how do the fundamentals compare versus, let's say, some of the other competitors, companies, and they're not necessarily apples to apples. Zscaler isn't the same as CrowdStrike. Sentinel-1 is a much smaller company, closer to $1 billion in revenue versus, $3-4 billion for CrowdStrike. The challenge is that there are cybersecurity players out there that are growing in line or faster than CrowdStrike, which is CrowdStrike's now around 30%. And the fact is that CrowdStrike trades, even after this drop, it still trades around, 20 times sales, a little under 20 times sales, while there are competitors or, other players in the space that trade for much, much lower multiples. So that is a dynamic that I think investors need to reflect on, which is that you can't have a 20 times sales multiple business and have this type of snafu. If you are going to trade at 20 times sales, that means your execution better be flawless. And that's, I'd argue, a huge problem here. So I think you're going to have a reset, a continued reset with the underlying valuation. Let's explore thoughts about like looking at the actual valuation in terms of framework, how to think about, how it could perform in the future. This is once again AI ticker chat, thinking about the valuation framework. This is AI predict feature. And so thinking about this is just plugging in the key documents of CrowdStrike, the transcripts, asking AI to like say, hey, what do you think the growth rate could be in the years ahead? What do you think the margin could be? What do you think the multiple could be? And I oftentimes use this just to see like, does AI think there's something interesting here? Does AI think? And sometimes AI like sort of like poops all over itself. It doesn't work out well. But sometimes it's like, hey, this smells really good, and maybe you need to take a second look at this. So I'm looking at this and I'm not, based on the initial AI perspective, it doesn't really jump out. It's saying like 70% upside, 60% downside, and a heck of a, multiple a few years from now, 50 times earnings. Personally, as I refine these figures, and you can see how I've refined the inputs here, I think it's honestly just, I think AI largely gets it right. I just have slightly different inputs where I'm assuming lower growth over time, higher margins, maybe 20 to 30% profit margins over time. And I think a lower end multiple, 5 years from now, maybe around 30 times earnings multiple. I think 50 times earnings is pretty rich for that. But once again, you're not really getting a crazy compelling type of return. And I think it's important to reflect that there are easier plays out there with companies with comparable growth rates. One of my top positions, a company that I bought in the last few months, I called out to my subscribers, is growing at a comparable rate and trades at a tiny fraction, trades at like, 16 times free cash flow, this year's free cash flow, versus, CrowdStrike that's trading at, sales, a higher multiple of sales, trading at like 20 times sales versus, like 16, 17 times free cash flow. So despite comparable growth rates, very different businesses. But I think it's important to recognize that a lot of investors have moved into CrowdStrike over the years and had said, well, this is the dominant cybersecurity company. This is unrivaled. It's doing really well. Therefore, I want to own it. But the reality is it's important to recognize there's fundamentals, there's cash flow, and there's valuation. And looking at this type of valuation versus the recent execution, I would say it's a little too much. It would not surprise me if CrowdStrike, even if they continue growing, they get back on that, continued strong growth trajectory, that it's just going to be difficult for them. Because one is, think about a customer. Are you going to say, oh yeah, I'm eager to go and license and subscribe to more CrowdStrike products? No way that's going to happen. So I wouldn't surprise me if you have a guidance reset in the quarters ahead. Maybe I'm wrong, but it's tough for me to see how they beat guidance, with this development. And you're certainly this is going to enable their competitors to every single competitor meeting, they're going to have this as one of the key documents for people to take away. Hey, we haven't had this issue, therefore consider us, even though we're smaller, we didn't cause a global outage yet, maybe. And so that's, a dynamic for you to consider. And then this doesn't even factor in, let's say people lost their lives because critical, healthcare software was offline for a few hours. It's unclear what that underlying lawsuit liability could look like. I'm assuming at this point, just ignore that, just focus on the valuation where this could be in the years ahead, and it's still not crazy compelling. If you have a different take, I'd absolutely love to hear it in the comments below. Thanks so much for tuning into Unrivaled Investing.